As someone who's looking to invest in a property for the first time, there's one thing you should know. There's no perfect strategy. In this video, I'll be sharing with you 5 of the most popular investment strategies used in Australia, which you can use depending on your financial situation and goals. Hey everyone, Kim here from Tax. Today, we're diving into a crucial topic for property investors, finding the best investment strategy for you. There's no one-size-fits-all approach to property investment, but what works for others might not work for you. I see a lot of investors, especially beginners, make the mistake of following the crowd, despite not knowing what they're getting into. And more often than not, it ends with pretty severe financial consequences. So, today we're going to share a few of the most popular investment strategies in Australia to help you pick the best investment path. Stick around until the end so that you don't miss out on the strategy that may work best for you. Before we get into it, we want to be clear that this video is for informational purposes. In no way should you interpret this as tax advice. It's always best to work with a qualified accountant or tax agent who can give you the best advice for your situation. First up, we have the classic buy and hold strategy. It's simple. You purchase a property and wait for it to appreciate over time. While you're waiting, most investors rent out the property to generate income. This can help cover mortgage costs and comes with a sweet bonus, investment property tax deductions. However, depending on the market conditions, you'll have to be prepared to wait at least 7 to 10 years before you realize any capital growth. Now, let's talk about gearing strategies. You've got 2 options here, negative gearing and positive gearing. Negative gearing is when your rental income is less than your expenses. It sounds counterintuitive, but there's the clincher. The Australian Tax Office allows you to deduct these losses you make on your investment property from your taxable income. Many investors pair this with the buy and hold strategy, using rent to offset some costs while waiting for long-term capital growth. On the flip side, positive gearing means you're making a profit from your investment property. So, as an example, let's say you buy a property for around $400,000. Your mortgage expenses and other property costs ends up around $410 per week. If you manage to secure a tenant that pays you $520 a week, you'll not only be able to cover your property costs, but you'll also make a profit of $110 per week. That's positive gearing at work. Your rental return exceeds your expenses. While this means more taxable income, remember that claiming all your investment property tax deductions can help you reduce your tax bill. Alright, let's move on to strategy number 3, renovate and hold. You purchase a property, renovate it to increase its value and potential rental income, then hold on to it. The idea is that by renovating your property, you increase its value and possibly increase your rental return. So, while you are waiting to realize the potential capital growth, you could earn higher rent to cover your property expenses. You may even be able to positively gear your property. Not to mention, renovations will also allow you to claim depreciation. You can get in touch with a quantity surveyor like us to help you with a free assessment on how much you can claim. Just be careful though, there's no guarantee that renovating will increase your rental return. Even though you might plan as best as you can to lessen the risk, there's still a chance that your newly renovated property won't make more money than you spend. The next bit is one of Australia's most popular property investment strategies, and it simply involves buying a home which you plan to mainly live in. This is called your principal place of residence, which means you treat the property as your home for as long as you own it. Now, you don't immediately generate revenue from living in the property you buy. The 2 benefits of this property investment strategies are: 1, your cost base is likely to considerably rise in value, especially if you do any renovations and/or hold on to the property for an extended period. Number 2, if and when you decide to sell the property, you won't have to pay capital gains tax. This method is how many first-time property investors step into the market. Last but not least, there's the flipping strategy. If you're not interested in waiting years to see a profit from your investment, you can search for old, run-down properties to renovate and quickly increase the sale value. Not all property investors are interested in waiting years to see a profit from their investment. So instead, they search for old run-down properties to renovate and quickly increase the sale value. The benefit of this property investment strategy is that you can make a profit relatively quickly because most investors try to complete the entire process within 12 months. It's fast-paced and isn't for everyone though. It's one of the property investment strategies that demands the most skills. A lot of planning has to go into ensuring that you accurately predict the potential of the renovation. You also risk spending more money than you budgeted for if you don't tightly monitor your costs. So, this strategy is generally best suited to an experienced investor looking to expand their portfolio quickly. And there you have it, Australia's top 5 investment strategies. Remember, these aren't the only investment strategies, so make sure you do all your research before committing to just one. If you want to learn more ways on how to grow your investment portfolio and add more savings to your pocket, make sure to hit that subscribe button. We're always sharing valuable insights here to help you become a better property investor. I'm Kim Quach from Tax, and I'll see you next time.